This is question number 8 of the midterm exam. Analysis and interpretation of profitability, balance sheets and income statements for Nordstrom Incorporation follows. Refer to these financial statements to answer the requirements. So we're provided with the income statement for 3 years and the balance sheets for 2 years of this firm. So for hint, we need to pay attention to everything provided by the setup. The hint for sales, use total revenues for your computations when applicable. So we think the reason that it gives us the hint because it has the sales item and also has the credit card revenue and the total revenue. So we need to use the total revenue number rather than the sales number. That's what basically what the hint is saying. So part A, compute net operating profit after tax, NOPAT, for 2010. So assume that the combined federal and statutory rate is 37%. And also we need to pay attention to the rounding requirement. Round your answer to the nearest whole number. So net operating profit after tax. It's the formula for that is it's NOPAT. This is based on if we check our PowerPoint slides, I guess this is a problem from chapter 3, right? This is chapter 3. So on the profitability analysis. So net profit, net operating profit after tax. I guess this is net operating profit after tax, NOPAT. So NOPAT, net operating profit after tax, equals net operating profit before tax minus tax on operating profit. So this net operating profit before tax, generally speaking, that's simply the earnings before interest and taxes. So that's basically, we just look for the information, earnings before interest and income taxes. That's basically the net operating profit before tax. And then we need to deduct the tax given this number. And the tax basically is the tax expense plus the net non-operating expense multiplied by the statutory tax rate. So we just need to basically find the numbers, and in order to speed up the calculation, we can just copy the number into our Excel sheet. So we just copy that number and paste the special, just paste the text. And this is we don't need to leave so much space. Just this is our income statement for 3 years, and then we also copy the balance sheet. Similarly, we can just copy that here. So let me highlight this the item we need. So we need this earnings before interest and income taxes, which is basically the net operating profit before tax, right? That's basically the so let me just copy that number, NOPBT. This is basically the EBIT. This is EBIT. And then we need more space. And then tax. And then we calculate the tax on operating profit. So this is a formula is tax expense plus the pre-tax net non-operating expense times statutory tax rate. So tax expense. By the way, all these numbers should be positive number. So it's assumed to be positive number. So rather, otherwise, we need simply to, if basically what I'm saying is that we haven't taken care of the sign on these numbers yet. So we because the sign is taken care by this minus sign here rather than by the numbers themselves. So numbers here are assumed to be positive. That's what we need to pay attention to. The reason I say that is because in this case, as you can see, the tax expense, actually the numbers here turns out to be negative. And the reason it's negative is because in this income statement, we just need to add up everything rather than thinking about deducting some expense items. So that's why all these expense items, you can see that it's stated as a negative number. So that's what we need to pay attention to. So tax on operating profit, that equals tax expense. Again, we need to put a negative sign before this tax expense because the tax expense here is a negative number. And then we need and plus the pre-tax net non-operating expense. So pre-tax net non-operating expense basically is the item after the EBIT, which is the net interest expense here. Again, this is a negative number, but in using this formula, this has to be a positive number. So we need to also put a negative sign in front of this pre-tax net operating expense. So negative sign in front of this net interest expense, and then multiply by the statutory tax rate, which is going back to the setup, which is 37%. So it's 37%. And then that's the tax on operating profit. And then NOPAT, net operating profit after tax, that can now be calculated by taking the difference between the NOPBT, which is EBIT, and this tax here, right? Which is the minus B2 minus B3. So, and then we need to pay attention to the rounding requirement. Round your answer to the nearest whole number. So we need to just keep this to the whole number. So number, and then there's no decimal place. And so it turns out the number is 528. So part B, compute net operating assets for 2010-2009. So net operating asset. So let me use this space here. Net operating, for this we have to go to the balance sheet. Let me highlight the items for which is relevant for the calculation here first. So net operating asset is, again, if we go back to our formula, net operating asset, it turns out to be operating assets minus operating liabilities, right? So it's operating asset. Again, how do we differentiate between operating and non-operating asset? So operating asset basically are the assets which are related to the primary function of a firm, except for the cash, right? Except for the cash. So in this case, we just rule out the cash. Cash is here. And then we include accounts receivable, and then inventory, merchandise inventories, and then other deferred tax assets, or current deferred tax assets, and prepaid expense. All these are part of the operating assets. And then land and buildings, net, and goodwill, and other assets. All these are operating assets. So in other words, rather than adding up these items, because the only item which is out from the asset side of the balance sheet is the cash. So rather than adding up these different items, we can also take the difference between total assets and the cash and cash equivalent here, and that also be equal to the sum of this or all these different items here. So that's the that's the asset side on the operating asset, and then operating liabilities. So operating liabilities just mean those liabilities which is not financing related. By financing, we mean borrowing from a debt from a bank, such as a current debt or a current portion of the long-term debt or the long-term debt. So both are excluded. But other items such as accounts payable, accrued salaries, wages, and related benefits, and then other current liabilities, these are included. And again, a current portion of the long-term debt is not, because that's financing related. And then long-term debt, that's not, that's also financing related. And then deferred property incentives, that's also part of the operating liabilities and other liabilities too. So all these are operating liabilities. So now let's calculate the net operating asset by taking the difference between the operating assets and operating liabilities. Again, how do we calculate the operating asset? So let me just do one more step. Okay, so operating asset and then operating liabilities. So operating asset basically is the sum of these different items. But again, because the owner item that's ruled out from the asset side of the balance sheet is the cash. So we just take the difference between the total assets and the cash, and that's the sum of these different items. And that's the approach we're taking here. So that's basically the total assets, and then minus the cash and cash equivalents, and that's the operating asset. And then we pull the sale to the other year, and then we could get the operating assets for the 2009. And operating liabilities, and that's basically the sum of these different items, which is highlighted in red. And then deferred, and then other liabilities, and then that's the operating liabilities. And then we'll also pull out the sale to the other side, to the other year. So now we can take the difference of these two numbers to calculate a net operating assets. So that's basically this operating assets minus the operating liabilities, and then we just pull the sale to the other year. And this is the number we need for net operating asset for 2010, and for 2009 we just copy the same. Similarly, we just copy that number back 2009 and compute return on net operating asset. So net return on net operating asset, this is basically we add more rows. We need more rows here. Okay, more rows. We probably need more row later too. So let me just add return on non-operating and return on net operating asset. And this is basically just defined to be net operating profit after tax divided by the average of the net operating asset of the 2 years. So we just use the average function here, AVERAGE. There's an average function in Excel. We just use the average function and then open parentheses, and we just take the average of these two cells and then close the parentheses. So that is, and then we just need to pay attention to the rounding requirement here. Here is compute RNOA, net operating profit margin, and the net operating asset turnover for 2010. Do not use NOPM, net operating profit margin times net operating asset turnover to calculate RNOA. We need just to use the definition, basically to use to calculate these items. Do not round until final answers. Round to two decimal places. So here, let me keep 2 decimal places before the percentage sign. So we use a percentage, and this is turns out to be 15%. This is 15%, and the 2010 NOPO. So net operating profit margin, and this is defined to be net operating profit after tax divided by sales. So divided by sales. So that's basically this number. Again, in doing that, we go back to the hint. For sales, use total revenues for your computations when applicable. So that's where we need to pay attention to that hint. We need to use the total revenue here rather than as the denominator, rather than just the sales here. So, and then we just keep the number to 2 decimal places before the percentage sign. So that is our 6.12%, 6.12% NOPM, and NOAT, net operating asset turnover. That's basically we just add one more row just to leave more space. And then this equals sales. Again, this is total revenue divided by the average of the net operating asset. So that is basically what this NOAT means. 2.45. Compute net non-operating obligation for 2010 and 2009. So non-operating obligations basically are defined. Non-operating NNO, right? It's NNO, net non-operating obligations. It's called net non-operating obligations. So that's defined to be the sum of the non-operating liabilities minus the sum of the non-operating assets. So the order here is just the opposite of the order to calculate the net operating asset. Because in calculating the net operating asset, we take the difference, we subtract the operating liabilities from the operating asset. But in calculating the net non-operating obligations, we actually subtract the non-operating asset from the non-operating liabilities. So that's what we need to pay attention to. So non-operating liabilities basically is just the current portion of the long-term debt plus the long-term debt here. So we just take their sum, current portion of the long-term debt, and then plus the long-term debt. And then, so that's the non-operating liabilities. And then for the non-operating asset, that's basically the cash. So that's basically the cash. And then pull the sale to the other year. And then this is the number we need. Non-operating net non-operating obligations for 2010 and net non-operating obligations for 2009. Compute return on equity for 2010. Round your answers to 2 decimal places. Do not round until your final answer. So and then we add one more row here. ROE. So ROE, return on equity, is defined to be net earnings or net income, right? Net income. The denominator is the net income, but the numerator will be the average of the total shareholders' equity. So when the total shareholders' equity includes preferred stock, we need to deduct that from the total shareholders' equity. And when the total shareholders' equity includes the non-controlling minority or minority interest, we also need to deduct that from the total shareholders' equity. But here it doesn't have those items, so we just need to directly use the average of these two numbers. Uh, that's the thing we need to use. So average of these two numbers, which is the total shareholders' equity from the balance sheet, and then that's our ROE. Again, we need to pay attention to the rounding requirement. So percentage, and then keep two decimal places. So this turns out to be 31.70%. And then F, infer the non-operating return component of ROE for 2010. Use answers from above to calculate. Round the answer to two decimal places. So this question requires our understanding that ROE is the sum of the operating return and the non-operating return. So operating return basically is this return on net operating asset, as we just calculated here. So, and we also calculated this ROE, right, based on its definition. And then from these two numbers, we can infer this non-operating return. That's basically what this question is asking us. So this becomes a very easy question by simply taking the difference between the ROE. This equals ROE and the net and this net return on net operating asset. So this gives me 16.71%. 16.71%. So the final part, comment on the difference between ROE and RNOA. So in this case, the ROE is 31.7% and RNOA is only 16.71%. So that means that the non-operating part of the firm is also generating a positive return, right? Because this number is higher than this number. So, and the reason for that is the non-operating part of the firm is basically coming from the financing part. And in this case, it's borrowing from the bank, borrowing from the bondholders. So we need, and that part is generating return. That means, why does the firm borrow? Because it wants to finance its operations, right? Finance its operations. So when that borrowing, when the return from the firm's operations turns out to be higher than its cost of borrowing, and then that part of the non-operating part of the firm is generating returns for the firm's shareholders, and that's why this ROE turns out to be higher than the return on the net operating asset, because this is the part of the return generated from the major operations of the firm, right? So that's the reason. So basically, we just look for the answer which matches our analysis. ROE is greater than, all these ROE is greater than, because that's easier, right? Implies that Nordstrom's equity has grown faster than its NOA. That's not what we just figured out. Implies that Nordstrom is able to borrow money to fund operating assets that yield a return greater than its cost of debt. And that's exactly what we just analyzed. The excess return accrues to the benefit of the Nordstrom stockholders. Right? That's why basically the non-operating returns comes from the leveraging part of the, right, the financing. Financing here means the borrowing from the because and that also could be seen by the other major analysis, decomposition analysis for the ROE, which is the DuPont analysis, right? The DuPont analysis also we have the financial leverage impact there. So that's basically also captured by this non-operating return, and that's why the ROE is greater than the operating return. So we just choose this answer here. And save our answer.